Nouriel, I was listening to a talk you gave recently where you framed this that your best case for what we were seeing moving forward was a greater recession, meaning a recession worse than the Great Recession, and the worst case was a greater depression, meaning a depression that could be worse than even the Great Depression. How did you get to where you are right now, and what are we looking at?
Well, I was looking very carefully at what was going on with the economy and the markets. And already, literally at mid-January, I have a proprietary tool. It's called the boombust.com signal. That market was signaling that the S&P 500, when it reached about 3,300, it was vastly overbought. So every measure of price action, of valuation, and so on was suggesting that we were in a bubble territory. And then the signal was sent out and was said, this is the time in which a bear market might be starting. It took only a few weeks until we got to that bear market. And since that signal, the market moved sideways, didn't go much higher. So the market fundamentals were suggesting already that we were in a bubble, in an equity bubble, certainly in the United States, and that any shock could lead them to a market downturn. Now, nobody could have predicted that it would have been a pandemic, but there were plenty of other things. But when you are in a market in which the economy has too much debt and leverage, asset prices are way overbought, then any kind of macroeconomic shock or other shock can lead to not just a correction, but a significant bear market. So the trigger ended up being the COVID crisis. Also, early on, the market commentators were kept on saying, this is going to be just a market correction, maybe a market down 5-10%, not a bear market. They were saying the economy is not going to go into a recession, or if there's going to be a recession, it's going to be just a quarter and then a very rapid V-shaped recovery. I was looking at the data and seeing how the pandemic would spread from China to the rest of the world. Anybody scientifically could see it is going to go first China, then Taiwan, Korea, Hong Kong, Japan, and then it was spreading to Italy. It would get to the United States. So the WHO predicted this will be a global pandemic only later on, but anybody looking at the data could tell it was coming. And given the shock to economic activity in China, you knew that if in China you had the shutdown of economic activity, something similar, if not worse, would happen in the rest of the world. So the idea there'll be a correction or a V-shaped recovery did not make any sense. That's why throughout January into early February, and then with a long piece on the Financial Times and op-ed, I said this is delusional to think this is going to be just a correction or a V-shaped recovery. This is going to be something like a bear market, first of all, and it's going to be a severe recession, not just in China, but globally, and it's not going to be a V-shaped recovery. And guess what? At that time, pretty much every market commentator kept on talking their books, and their book was hold your position, don't go short, so don't sell. It's going to be just a correction. It's going to be a mild economic slowdown. And now, guess what? A month later, literally the consensus now, we're not speaking about me, the consensus says this is going to be a recession greater than the global financial crisis. You look at what Morgan Stanley, JP Morgan, Goldman Sachs are predicting. They're predicting that Q1 economic growth in the US is going to be sharply negative, between 5 to 10%. And in the second quarter, the economic activity, GDP, is going to fall in the second quarter at the annual rate of 25 to 30%. 25 to 30%. We have never seen anything like this. We've not seen it during the global financial crisis. We've not seen it during the Great Depression. Those were slow motion train wrecks. This is just a front-loaded, not financial shock, but a real medical economic shock. So now consensus and conventional wisdom speaks about the greater recession. So that's baked in already in the market. The fact that the market went down 35 to 40% has reversed itself, but only 10%. And in my view, the worst still to come for reason I'm going to discussing. But now the consensus says this is not a correction, it's not a V-shaped recovery, and it's going to be as ugly or probably uglier than the global financial crisis. So that's baked in the prices. The question is whether instead of a greater recession, greater than the global financial crisis, we could end up into a greater depression. And in my view, there are conditions under which we end up into a greater depression, not a greater recession. At this point, is guaranteed to happen.